Venus Concept Inc. stock is currently trading at $10.59 USD, marking a massive intraday surge of 635.42% as of this moment on Friday, January 16, 2026. This isn't just a standard green day, it is an explosive move that has caught the entire market off guard, especially those who had written off the aesthetic sector as a victim of high interest rates and declining consumer discretionary spend. When you see a number like 635% on your screen, the immediate expectation is that the company has either been acquired or has announced a world-shifting medical discovery. But the reality is actually much more concentrated and perhaps more telling about the future of the company's survival. The move we are seeing today is largely driven by an amended 13D filing from Madryn Asset Management, which revealed a staggering 91% stake in the company. In the world of micro-cap investing, when a single institutional player effectively takes over the table, it signals a fundamental shift from a speculative trading vehicle to a controlled corporate turnaround. The immediate reaction to a price spike of this magnitude is usually a mix of excitement and skepticism. Many retail traders look at the chart and think they missed the boat, while others assume a reverse split has occurred. While Venus Concept has a history of reverse splits, including a 1-for-11 move in early 2025 to stay listed, today's action is backed by a level of institutional conviction that is rare in the penny stock market. Madryn Asset Management isn't just a passive investor here. They've been systematically converting debt into equity, cleaning up a balance sheet that was once a mess of high-interest obligations. If you're looking at the stock market today through the lens of a platform like the Fidelity mobile app or using the Interactive Brokers platform to gauge momentum, you will see that VERO is the absolute leader in percentage gains. This creates a curiosity loop for the smart investor. Why would an asset manager want 91% of a company that has struggled with consistent profitability? The answer lies in the expectation versus reality gap of the medical aesthetics market. The general belief about Venus Concept is that it is a struggling manufacturer of laser and radio frequency devices in a crowded market. Investors have spent years watching the stock price erode, assuming that bigger players would eventually crush them. However, the deeper reality is that Venus Concept has been quietly repositioning itself to catch a massive wave that most people haven't connected to the medical device sector yet: the GLP-1 weight loss boom. As millions of people around the world lose significant weight through new medications, they are left with skin laxity and body contouring needs. Venus Concept's recent FDA clearance for the Venus Nova platform in late 2025 was designed specifically to address this unmet need. While the market was focused on the company's debt, the company was focused on the post-weight loss patient. This is a classic case where the narrative of a dying company is being challenged by a strategic pivot that professional money is now betting on heavily. When you look at the recent stock movement leading up to this Friday surge, the trading volumes have been erratic but trending upward. Institutional activity has been the primary driver, with debt-to-equity exchanges being the main theme of 2025. In October 2025, the company exchanged over $11 million of debt for preferred stock, which slashed their total debt obligations by nearly 24%. This wasn't just a financial maneuver, it was a vote of confidence. By the time we hit the Q3 2025 earnings report in November, the revenue was around $13.8 million, which was a slight decline, but the energy-based device sales were starting to stabilize. The market saw the net loss of $22 million and panicked, but the savvy players noticed that a large chunk of that loss was due to one-time restructuring costs and debt extinguishment. They weren't looking at the past, they were looking at the commercial introduction of Venus Nova in December 2025 and the planned global expansion throughout 2026. If you're a self-investing individual using a Robinhood account or exploring investing sites to find the next big move, you have to look at the business model. Venus Concept doesn't just sell a box to a doctor and walk away. They've been pushing their Venus Prime program, which is an in-house financing model. This allows clinics that might struggle to get traditional bank loans in a tight credit environment to still acquire the latest technology. This creates a recurring revenue stream and builds a moat around their customer base. While Apple stock or Nvidia stock might dominate the headlines for their trillion-dollar valuations, companies like Venus Concept offer a different kind of opportunity, a deep value turnaround play, where the risk is high, but the institutional backing is now nearly total. With Madryn holding 91%, the float is effectively locked. Any increase in demand can send the price into the stratosphere, as we're seeing with today's 635% move. Comment below how many shares of Venus Concept you currently hold, or if you think the aesthetic medical device market is overvalued right now. It's important to remember that today's price action is happening in a specific macroeconomic context. We're seeing a lot of interest in individual brokerage accounts as people move away from broad indexes to find alpha in specific sectors. The medical technology space has been beaten down, but as interest rates stabilize, the cost of financing these expensive medical devices for clinics starts to drop. This makes the Venus Concept value proposition even stronger. Their product portfolio is extensive, covering everything from hair restoration with the Artis iX robotic system to non-invasive body contouring with the Venus Bliss Max. They have a presence in over 60 countries, which gives them a diversified revenue base that isn't solely dependent on the U.S. consumer. The story of Venus Concept is a lesson in storytelling psychology. The expectation was a slow decline into bankruptcy. The reality is an aggressive restructuring led by a major asset manager who sees the long-term value in the intellectual property and the market timing. For an investor using Schwab Intelligent Portfolios or looking for investment help through Fidelity Wealth Management, a stock like VERO usually doesn't fit the profile of a stable long-term holding. However, for those who engage in online investing with a focus on high-growth turnarounds, this is exactly the kind of setup that creates massive wealth. The $10.59 price point we see today is a reflection of a new baseline. The market is repricing the company not as a failing entity, but as a subsidiary-like vehicle of Madryn Asset Management. The recent development with the Venus Nova platform cannot be overstated. It is their most advanced multi-application system, and it launched just as the GLP-1 market is hitting its stride. It features FlexMAX EMS, which can deliver up to 100,000 contractions per session. This is the kind of technology that clinics are desperate for as they try to offer holistic body transformations. When you consider the sheer number of people who will need skin tightening and body contouring over the next few years, the potential for Venus Concept to capture a significant share of that market is real. The company is shifting from just selling hardware to providing aesthetic intelligence, using IoT connectivity to give clinics real-time analytics on how their machines are being used. This data-driven approach is something you see in big tech, but it's still relatively fresh in the medical aesthetics world. Looking forward, the future outlook for Venus Concept involves several key catalysts. First, we need to see the initial sales data from the Venus Nova launch. If the December 2025 numbers show strong adoption, it will validate the turnaround. Second, the global rollout throughout 2026 into markets like Taiwan, Colombia, and India will be crucial. They recently certified several products in India, which is one of the fastest-growing aesthetics markets in the world. Third, the potential sale of the Venus hair business, which has been delayed, could provide a much-needed cash infusion of around $20 million. If that deal finally closes, the balance sheet will look even healthier. The risks, of course, are still there. The company is still losing money on an EBITDA basis, and they are heavily reliant on one major shareholder. If Madryn decided to change course, the stock would have no floor. The contrast between expectation and reality here is the key to understanding the current price. Investors expected another year of dilution and decline. Instead, they got a massive debt reduction and a virtual takeover by a firm that clearly sees something the rest of the market missed. Whether you're using SoFi Active Investing to pick individual stocks, or you prefer the robust tools of the Interactive Brokers trading platform, you have to respect the price action. A 600% move is a loud message from the market. It tells us that the old Venus concept is gone, and a new, more streamlined and institutionally backed version has taken its place. This is the kind of insight that helps you stay ahead of the curve in online investment. In summary, the $10.59 price tag we're seeing today is the result of years of painful restructuring finally hitting a tipping point. The institutional activity from Madryn has changed the